Is there really just one cockroach? Hi, everybody. Welcome to the Market House. I'm Maggie Lake, and today I'm talking markets with Dale Pinkert, trading coach at TradeGateHub. Hi, Dale. How
Hello,
you
Maggie.
feeling this Friday?
Well, like I was telling you, I have an ambulance waiting for me after the show. Take me.
And you had me hysterical laughing about that.
uh,
Boy,
Wild
I feel
week.
like people probably feel like that too.
Yeah,
A lot of people.
definitely. The way you thought things were going to go going home last Friday, um, when it comes to equities anyway, is not the way it turned out. So that's why we have to be flexible and deal with the cards that have been dealt.
Yeah.
So,
So I just want to reference and say, first of all, hey, everybody who's joining us live on Substack and YouTube. It's great to end the week with you and Dale in his residency. We love it so much. It's been so helpful because every once in a while I'll tweet out. But if you've been paying attention, we've been really talking about not only what's happened, but also kind of creating a framework, certainly on what Dale's looking for on the week to come. And important levels to watch as we try to keep up with this barrage of headlines. And I'm referencing in terms of the intro, the cockroach. Most of you saw the headline that Jamie Dimon coming out warning there's never just one, because we've seen some strains in credit, in banking. We saw regional banks get hit hard. We've seen some individual names get hit hard. People worried about bad loans, credit, exposure to bankruptcies. And this really started with First Brands. And so some people are saying it's fine. Moody's coming out with comforting words today, but other people are worried. And we're seeing that play out. But Dale, wow, the market reaction in so many different places has been really volatile.
yeah,
So
we
what are
talked
you
about those
watching?
bankruptcies
Mm-hmm.
last week. So the market all of a sudden recognized it. Really, the problem is in the darkness, and that's the shadow banking system, which I believe dwarfs the traditional banking system that we have,
Mm-hmm.
which doesn't have to disclose and doesn't have the same type of regulation that regular banks do. So, a lot of this, when banks were tight, a lot of people went to the shadow banks, and I think a lot of this is what's going to come home to roost. People have been warning about the shadow banking system for a while, and I think we're seeing the first result. So, if you want to know where the cockroaches are, that's a house to go into.
Yes. And like it seems like the interesting thing, and folks weigh in the comments. I know you're going to ask your questions, but certainly, you let us know how you felt about watching this. It felt like it was accelerating and that was starting to happen. And I mentioned to you all, we're gonna move up. We're gonna release Grant Williams on Sunday. My conversation with him, because his point was, confidence is so fragile, right? And so you can have these people rolling out lots of data, but if it starts to crack, that's worrying. And it looked like that was happening, but then there was really interesting price action and a bounce back. So, first of all, what's top of mind for you, Dale, as you look across the markets, like big moves? What really jumped out at you?
Well, confidence remains until the con is discovered in confidence. Okay.
That is a
So,
great saying. That is
so
a great
anyway, and
line.
we all know there's a con game going on. Fed's fighting inflation. They've been watching gold go up for 2 years.
Mm,
Alan Greenspan used to pay attention to gold. It was a barometer for him that when gold was going up, that things aren't all okay.
mm.
And this is a thermometer that has burst through the top, and we're going to be looking at an easing again at the end of the month. So, yeah, he's definitely turned out not to be a Paul Volcker. That's for sure. But what we have is distribution taking place. But I think the real star, you have to talk about silver. You know why? Because they're talking about it on CNN. People are getting promotional emails about buy silver now. It's going to triple in a year or two. There's all kinds of FOMO. Be careful about how you buy your physical, especially with spreads in this type of environment. So, anyway, I left last Friday saying sell silver at 53.20, 53.30, and I think it'll be early next week. It happened in, I believe, either the European session Monday night here, or Asia early Tuesday. We put in the high. So I thought I'd talk about silver. So if you took the idea seriously, you got short the silver at 53.20 right here. You had a little bit of a drawdown. It went to 57, so 20, 30 cents. And intraday from 320, it broke all the way to 50.40. So almost $3 for a day trade. Now, what I got wrong is that wasn't a market top. But I was, what I was thinking is, I think I'd rather be right the trade and wrong the market than wrong the trade and right the market. And I know everyone who's watching right now have been in trades where they were looking for an advance or a decline. They got in, they were premature. There was another wave that took them out. And then they ended up being right about the market, but they lost money. So I was wrong about that being the top, but the trade worked, which is I'll take that every day. I'll be wrong every day if when I enter trades, they work and they go my way for $3 in silver. So, one of my P's is persistence. So even though we didn't get a reversal day, I tried it a couple more times up here at 53. And then I was on air doing a live stream on my YouTube channel. And I said, you know what? We're going to take out these highs. And I think we'll still maintain the divergence, which is why silver was my preferred short, because the RSI structure, and this is a 4-hour chart, look at silver. The last confirmed high was here on the 13th. Look at gold. No divergence. You're getting 80 readings. And that's part of the gold silver ratio, which I also said bottomed last week. So we peaked up here. I sold it at 370. I took heat of 70 cents on silver. So if you do low leverage, you can ride it out. It's almost like you have to risk that nowadays in silver, and $30 in gold, and because the ranges have expanded. So anyway, here we have a pretty negative day. I think you could call it a key reversal. All right, we took out yesterday's high, yesterday's low. And then look at the two areas that it's held. Kind of reminds me of the S&Ps holding a throwover line, but this is just a flat line. And do you know why this is important, Maggie? This 50 and a half level?
Why?
Because people are calling it a monthly breakout. The 50 level, because we had two previous highs of 50 during the Hunts brothers. And then in 2011, let's see if this will show it. Yeah, it still doesn't go back to, there you go. So here's Hunt brothers back here. Okay, here's 2011. So it broke through a double top. That's a breakout, right? So it's trying to hold the breakout. I don't think it will hold the breakout. I'm not looking for a crash, but it's going to look like a false breakout when we start closing back under, this level that I'm showing you here, 50 and a half. And so I think silver's in a corrective phase. We get through here, I could see 48 to 46, and 46 is going to be really the whole ball game. And one other thing. So silver's been going up, and everyone knows the word parabolic, right? But look at this 9-day has been supporting the parabola up on the way up. And that too is right at 50-50. It tried to take it out, but closed above it. So again, back under 50-50 is going to measure 46. And 46 is very pivotal too, because look at this level here. This is 46. This is where our launch pad and also 200-day moving average is coming in here. This is going to be an important crossroads if we get to $46 silver, because then if it doesn't hold it, you could then make a case for $40 silver.
Wow, that's a big.
Yeah.
That's a big move.
I'm not as ambitious about the downside. Maybe I will turn again because the impressiveness of the gold rally and still having these kind of readings, even on intraday, does not really speak of a top. It speaks of exhaustion and being overbought. Same with silver on the daily. The daily is confirming in silver. What gave me hope was the intraday stuff. So it was a 4-hour divergence that I traded, since Tuesday's trade. So I think that we put in a pretty important top. I talked about hedging your miners. I was early on that call, and I bought dust, which at one point this week looked like that's what it was going to turn into. I, I was going to get my Swifter out and do my screen, but it looks like it could turn the corner. I'm not going to be as ambitious on this either, but I think I could see 12 to 14 during this correction in the shares. I mean, they took it pretty hard, but they skyrocketed. But the action, I think you have a lot of people possibly trapped in these miners because they were just buying them at any price and being rewarded for buying them at any price. But
that's why these points in markets get dangerous, especially when things move, which I know you and a lot of folks who are, longtime market watchers say, watch out for parabolic moves because they can mean revert really quickly and rip your face off. But, you still get everyone who jumps on the momentum. What about gold? J&J asking about metals in general, but also wondering about gold and platinum, palladium, any of that.
Well, the gold silver ratio is saying, Dale, if you're going to be short precious metals, silver is your preferred short. If you want to be long precious metals for now during this bear market rally that we're going to get in the gold silver ratio, which had a pretty good week, came out of the hole here at 78. Maybe it's going to pause, but I'm looking for more. So gold's going to hold up better than silver. But, why can't we have a shakeout to, under 4,000, maybe back towards 3,800? And, that wouldn't really damage it. It'd probably be a buying opportunity. I know some guys that are thinking we're going to get all the way back down to 3,550. I don't think so because of the momentum. But it's vulnerable here. As someone showed an analog that it was a very similar situation in 79 where we moved sideways and then we had 9 weeks up in a row, which is what we're having here. And that was the last real big bull market besides 2011. That was during the Volcker days where he didn't like, 880 gold. That was the Russian invasion of Afghanistan. That was a top in 1980. That was a top in the silver market. And, just for a history lesson, does anyone in the audience know what ended the bull market in silver in 1980?
Anyone?
Any history students out there?
History? Bueller? I was thinking
Bueller?
that.
All right.
Well, you can put it in there. It's not always in real time.
Yeah.
If any keen historian is out there, you go ahead and put it in and I'll make sure we mention it. So while they think about that, okay, well, the Doe Dub said no idea. I appreciate your honesty.
Okay.
Well, was it what J&J saying, was it when Hunt Brothers got squeezed?
Well, they were doing the squeezing. All right. They had the market cornered. Okay.
Change in margin. Christopher says change in margin by COMEX insiders.
They raised margins. And it worked for a while. And that's what they're doing right now. They raised margins on
of course,
silver.
Christopher knew that.
But what ended the bull market was they changed the rules to liquidation only. So you couldn't buy anymore. You could only sell. The only buying would come in from shorts, covering their shorts, meaning you could only liquidate.
That's just creating. That's actually absolutely creating that incident. Then that's amazing.
Yeah, they changed the rules. How about that?
Hmm.
So don't be surprised if it happens before. There could be controls, and there'll be capital controls and limit our freedoms, even with our money. It's all, I think, starting to happen in Europe. They're limiting withdrawals in certain countries of what you can take out of your bank account. But
Okay,
that's
so
what ended. That's what
let me
ended the bull market.
So let me underscore this, because I was also reading the answers. So in your mind, we've got this huge bull rally in metals, but when we're looking out across the horizon and moving a little away from your shorter term trading perspective, one of the risks you see is, watch out, you may not be able to make the trades you want if
The government,
we start to see rule changes, government
capital
authorities stepping
capital
in.
controls,
Capital controls. Interesting.
which will happen if the bears are right about the dollar. There'll be capital controls, and just like there are in China. That's why people are trying to get their money out of China.
Mm.
Okay, so I think it's going to happen in Europe, maybe after they have the CBDC, and it'll happen here too. It has happened. It happened in the 70s. We had some capital controls, and we had then we have the inflation where they couldn't raise prices. I forgot what they called it, but the government will get draconian. Oh, look at this gap at $40 in silver. So that's my take on silver,
Mm.
and on the metals. I think a very interesting week, and bulls should be happy because it's going to set up a nice buying opportunity in both the physical and the shares, because I do think eventually we're going to see 70 and even triple digits down the road. So this is going to be an important break to at least have some participation in it.
Yeah, and you would imagine, given what we're seeing, I think this is going to segue to stocks, that especially because it's all over the place and people are aware now, and we're all having conversations about exposure to metals in your portfolio. There are people on the sidelines waiting to buy that kind of dip. So I would
Yeah,
imagine
they're jumping in now, and they couldn't. Retail was selling their silver at $20-$30 because they didn't want to wait anymore,
Mm.
and now they're coming back in, and just if you've been watching the silver trading, even in futures, the spreads are crazy. You could have like a 4 or 5 cent spread between bid and offers. So um, whatever Brent was talking about, the liquidity of the markets seems to be drying up in this kind of move because the spreads aren't tight.
Mm.
It's really something retailers should avoid, actually, because you're going to get chopped on the spread if you throw market orders in. The only way to trade it is with limit orders, because otherwise you're going to give up 4 or 5 cents on the in, 4 or 5 cents on the out, maybe worse. So you start in the hole a dime, down a dime.
That's really important if you're listening to this and you are somebody who's self-directed and you're newer to this market. Please go back and re-listen to that part, because that's really fantastic advice. Those kind of technical aspects really matter. So Dale, what are we looking at the S&P? I mean, we've had a couple of days where we thought, okay, here we go, and
Oh,
bounce.
yeah, last Friday.
Yeah, bounce right back today too.
Look, anyone that learned, I was talking to you before the show, Maggie, and anyone that was taught that this is a buy signal on a Friday going home is a technique I never learned, because it was an ugly close. You never really had a chance to cover shorts because S&Ps came in, about 150 higher, had a few pullbacks. Now it looks okay. Like we're going to trade up towards the top of the range, maybe even try a new high. So we don't have, and early today it looked like we were going to be able to take out this low.
Mm.
And then President Trump came out with something about that there aren't going to be 100% tariffs.
Mm.
So in full bloom, the taco trade. Keep in mind this, even if we go up and we have the new highs, that the character of the market has changed. Look at the wide-ranging candles. There are 100-handle day trades in S&Ps now. Okay, and don't forget that just because President Trump says that they're going to have a deal and come together, there are two sides involved in this negotiation. Mm-hmm. And I know both of them are pro stock markets because they need the wealth effect. Okay. China, because of their real estate problems, they need some kind of wealth effect. So they really wouldn't like a bear market. But as I've said many times in the past, that the Chinese population and the security of Xi's job is different than what we have here in America. So I don't know. President Trump says there's going to be a deal. Have the Chinese withdrawn the restrictions on strategic metals that initially upset President Trump? I don't think so. So we'll see. I mean, you're only going to be able to talk up the market for so long without there being action and not just talk. So really, this is all, just like this was President Trump, and then this was President Trump. We have in one person, people used to talk about the plunge protection team, the PPT. Well, President Trump is both the plunger and the plunge protection team, all in one. So he saved the market again.
Yeah.
So I think we're going to at least test these highs, but it's not what the market's going to do. You know what it is? It's what am I going to do? What are you going to do? Do you view this as, I better get long, we're on our way to 7,000? Or are there certain things that perhaps you wished that you had done some harvesting in October when you saw this, and then you thought you were too late to do it? Maybe this is another opportunity to raise cash on this rally and for speculators to look to short some things. And I have a couple of candidates. For example, Nvidia peaked at 195-ish, had about a $20 decline. And I'm looking to put on some short positions up around 188 or so, maybe 190, and I'll get out if it makes new highs. I'm still holding the stocks, all the profits. I didn't have a chance to take them. I had doubles or more, and I was, you know what I was doing? I was doing an interview with Maggie Lake. So anyway, but there was I thought, I've got them, it'll be at 6 Monday or Tuesday. Anyway, I'm still holding them. Look at the glaring divergence here on this. Okay, so even if we make new lows, I don't care. They could take it to 350. I'm buying them. I'm still going to buy them. And I would love to see a new high in this ETF, which is the Mag 7.
Wait, let me ask you back up a second, because we did have a specific question about socks. So you are still buying them? You're still holding them, or I'm
still holding them. I actually bought some. I bought more.
Semiconductors.
No, I'm bearish. This is a bearish inverse.
Okay, that's really important. Sorry. See, folks, I'm also multitasking, and I thought, given how you feel about tech, that was unusual. So I'm glad I asked you about this.
Yeah, I'm glad you did too. So, here's a SMH. We'll give you a picture of it. So, this was a break last Friday, and here we are trying to push the highs again. But even if we make new highs here, we're not going to confirm. It's my belief that this is distribution, not consolidation before another big wave up. So I would short this or buy the what I was talking about, the SOXS.
Okay.
So also we talked about junk bonds. They too have made a recovery, but I don't think they make a new high. To me, they look like, we had this break and now we're getting an ABC. They should have some trouble at 81. So this is saying credit spreads are coming back in again, but I don't think they're going to get as tight as they were before. So, but this is also what, turned the market was junk coming back. Junk is a proxy for the market. And if you're a currency trader, I want to introduce you to yen crosses. Okay, because these are proxies. This is a proxy for risk off. When it's going up, it's a proxy for risk on. And I'm looking to sell yen crosses, euro yen, Aussie yen, in the next couple of weeks, because I do believe the yen, which went to my target, I said 150 last week. We were at 260 last Friday. I'm looking to sell a rally here in the yen and sell yen crosses. Aussie yen being a traditional risk off pair. So that's where I stand on the markets.
Let's talk about TLT. We got a question before from MK. Wondering what your thoughts were on TLT, given everything we've seen.
I don't know, LT. You tell me. I mean, it's diverging. A lot of people are starting to believe in them. We have the market coming back. They still look okay. They haven't done anything wrong. They held the breakout 3 times. The measured move, I came here and talked about it, on this formation is about 93 and a half, up around these highs. So it'll fulfill the objective of this ascending triangle up here around 93. Hope that helps them.
We have a question, a sort of a follow-up, I think, when we were talking about Mag 7, and I kind of interrupted you, so feel free to fill in on Mag 7. But Dale, are you still holding Palantir short?
Yeah, I still think Palantir is in a topping pattern. And we should touch on the cryptos before the show ends too. But yeah, Palantir, if Palantir makes a new high, I'd also short short that. So I'm looking at strength the next couple of weeks as being a selling opportunity. I'm not getting back on the bull train up here. I still think we're going to have that correction in the S&Ps. That's going to take us down to a minimum of 63 and a half, then maybe 6,000, and then maybe 5,800. So I'm just looking for Palantir. It really hasn't done much. The banks look pretty ugly, but
yeah, KBW is where we saw some of that concern on regional banks.
Yeah. So I mean, Palantir, it could make a new high. In fact, it should, because this is confirmed right here. But this isn't where I think it's going to be a launch pad and go to 200. I would use strength and a marginal new high as a selling opportunity. It looks a lot like the Mag 7 ETF too, where it's just been moving sideways, and it probably needs to clean out stops above here. But 66 or so, I'll be looking to buy puts in this Mag 7 ETF.
If you're in the Substack chat, Christopher is putting in some good stuff as well about Mag 7 and what he thinks could happen. But I want to move over to cryptos before we're done, Dale, because we have Chet asking, yes, please talk to us about crypto. So what are you seeing here? Okay,
well, I think next week's a real important week. We retraced almost the whole recovery here. This was the weakest market. So metals continued their up move until the late week sell-off, corrective sell-off. Bitcoin rallied to 116, and then I was telling viewers that watch me that you had a little head and shoulders here that measured 104. I still think we're going to take out this low because it's a confirmed low, but I think Bitcoin has to make a stand around 100 grand sometime next week. And this is another bearish argument. There are probably some bears saying, well, 104 to 125, that's going to give you 80. But I was bearish up here, still bearish, but I'm starting to look for lows in Bitcoin, and Ethereum held up better. Maybe Ethereum's bottom, but Bitcoin hasn't. This is not a bad area to try Ethereum and be wrong under the spike low, or wait for Bitcoin to trade 100 grand and then buy Ethereum wherever it is, because I think Ethereum will outperform.
And this is where Dale always talks about probing, right? You don't have to go in like crazy, but if you're starting to set up a trade idea, maybe you want to tip your toes in and test the water.
Well, maybe we're going to have a rotation. Look, people feel sometimes that gold and Bitcoin are counter-cyclical to each other. When gold's in favor, Bitcoin isn't. When Bitcoin is, gold isn't. So maybe it's Bitcoin's turn to make a turn.
Turn to make a turn. Fantastic stuff. I just want to emphasize what you said a few minutes ago, Dale, and that is really take the opportunity. First of all, we always say this, understand what kind of market perception that you have, or what kind of market participant you are. Are you an investor, or are you a speculator or a trader? Those are very different hats to wear. So make sure you're really rock solid in which one you are, and take the opportunity to look over what you have. If you have a feeling one way or the other, maybe now's a really good time to do some inventory. And if you feel like you want to take some profits, do so if you're worried. And if you're super comfortable with the risk, that's fine, ride it. But this is a good time to take inventory, I think.
Yeah, I think there's we're going to have a kind of a rocky fall, is what I think, and then then we have the melt up into the spring of next year, 7,000 plus.
Wow.
But so this is an opportunity to be patient if you're an investor. I still try to be an investor, but you're right, Maggie. I'm a trader. It's hard to turn a trader into an investor because he sees things all the time that he feels he can act on and then always be able to re-enter and do things like that. In fact, the guy who has interviewed the best traders in the world, Jack Schwager, who I've talked to on many occasions, I said, Jack, what is the most important advice you could give a trader? And he's interviewed all the wizards, right? He said, find a trading style that suits your personality. Exactly what Maggie Lake just said.
And you can do both, right? Like, I know some people have their long-term pad and their short-term pad.
I don't know how they do it.
I don't know how they do it either, but some of them do. And so then you can, be a little bolder with your short-term trading part and then be wise. But we just don't want anyone to have to live through a drawdown that is really going to stress you out, because this is about trying to live well. So hopefully everyone takes the opportunity. Green, we talked a lot about, good to see you too. We talked a lot about silver, so I'd go back. He's asking, I don't know, Dale, if you know anything about this. I hate to hit you with this because it's kind of inside baseball and not so much trading. But have you been paying attention to anything about silver not being delivered, some sort of shortage? Is this like market?
The London Exchange, LBMA.
Yeah. Is that real? Is that rumor? Or do we know?
I think it's real. They moved a lot of silver to the U.S. from there to get in front of possible tariffs. So there might be jet airplanes. I heard there's jet airplanes flying silver over to London.
Why does this feel like a Hollywood movie in the making? But yeah. And as I say that, somehow Christopher's talking about the Rocky Horror. It's so funny. There's like a movie thread. Everyone's always sort of thinking on the same thing. And I just saw some big sort of piece on that. Great stuff. Thank you all for being with us. We just love ending the week with Dale. Dale, thank you so much always for sharing the wisdom as well as all the price action you're watching. It's so important right now.
You're welcome, Maggie. And I think every trader to really become elite has to watch the movie Trading Places at least 10 times.
The best.
Because I've modeled myself after Winthorpe. All right. And it's worked. So anyway, everyone have a good weekend. Don't forgive yourself if you had a rough week. It's part of it. And you're not going to be able to get in the boxing ring without getting hit. So just keep your dukes up and always protect yourself. And don't ever follow anyone blindly, including me. Do your intelligence gathering, but make sure you understand why you're doing what you're doing, or you'll never learn. You'll just become dependent on another.
That's absolutely right. And we're all here to try to help us all up that wisdom. And in that vein, we try to offer tons of different perspectives, right? So people who are bullish, people who are bearish, we're always looking for all of it. I'm going to warn you, Grant is bearish. Watch that interview. We're going to release it on the weekend. He talks about the Minsky moment. If you guys don't know what that is, he goes into it. But has some really interesting perspectives to share.
Well, I'm going to get even more aggressive on those shorting opportunities.
Yeah, exactly.
Okay. If he sees something like that happen,
he's
in
worried.
the background,
Let's just say he's worried, and this is why I think it's a good idea for us all to just take a look and make sure you're at your absolute comfort level. And that you're okay with the risk you're carrying. Doesn't mean things are going to happen. No one has a crystal ball, but we want to try to prepare people and make sure that you've considered every possibility.
You know what?
We're moving it up. We're going to release it. You have to be a subscriber though, so please go do that.
I know we're running over, but a stockbroker named Bernard Baruch had some real good clients like Kennedy and Rockefeller, and they asked him, why are you successful? And he said, I always sell too soon. Okay.
Yeah.
So don't be afraid of leaving chips on the table. At least you have chips you didn't have before.
That's exactly right. And you live to fight another day.
That's right.
Yes.
All right, Maggie.
Great stuff, Dale. Thank you so much. Go enjoy a relaxing weekend. You earned it after trading through this week.
Okay, you could bring it.
Bring it in, guys. Bring in the gurney.
Bring it in. I'm ready. I need a transfusion too. Of a cocktail or something.
Exactly. Anyway. I think we all need one of those. So
all right, Maggie.
Everybody enjoy the weekend. Thanks so much. As always, take care and good luck out there.
Have a good weekend.